G'day everyone and welcome back to our Hidden Gems webinar series. Well, if January is any indication, it looks like we're heading into an entirely different investment environment this year. For the first time in a long time, and I really can't remember how long it has been, inflation and rising interest rates are on the agenda. So for investors, particularly new investors, buying the dip simply because stocks have fallen is not an investment strategy. Access to capital for companies, particularly those with business models needing more capital to grow, is about to become a lot more difficult to access. And it wouldn't surprise us if we saw some high-profile casualties over the next 12 months or so. This is an investment environment that the investment environment that we saw in 2021 has literally changed overnight. So it's a time to be careful out there and perhaps hold some cash. Now, remember, with the webinar series, to ask questions by typing in the box provided, and we'll make a start straight away. First up, we welcome Lake Resources, ASX code LKE, market cap of $1 billion these days, 1 year return of around 190%. The company is a clean lithium developer, utilising clean direct extraction technology for the development of sustainable high-purity lithium from its flagship Carchi project in Argentina. We welcome back Steve Promnitz, who is the Managing Director. Steve, good to see you. Over to you. Thanks, mate.
Good morning, good afternoon to all of you, and a belated Happy New Year to you. As Tim said, it's been an interesting year, but one of the sectors that's going to do very well this year is battery materials, and particularly lithium. Lithium has got off to a great start on pricing. But what we do at Lake is deliver something slightly different into that lithium supply chain. First of all, high purity. End users will always look to buy the best product that's available on the market, and this is it. 99.95% or better purity, that means low impurities. That's what the end user is looking for. And the other key thing that end users are looking for is a cleaner environment. They're trying not to repeat the sins of the past with internal combustion engines. And so as part of this energy transition, if you can tick the box that shows a better environmental outcome, a better social outcome, you'll also be preferentially sought after by the electric vehicle makers and the battery makers. But the only way to do that is to use a new technology. That's what we've done by partnering with Lilac out of California. This isn't a black box. It's a very well-known water treatment method. It's just been adapted for lithium. We're on a clear pathway to production. We've had a successful pilot plant in California for some time, a demonstration plant on site soon, which will be containerized. We've recently announced that we're moving to 50,000 tonnes per annum, which will make this company the largest lithium producer on the ASX. And we aim to continue to be an independent producer at scale. Next slide, please. As part of what we announced a few days ago is that we are moving straight through to 50,000 tonnes per annum production. We have a PFS that came out in 2020, updated early 2021, that showed 25,500 tonnes per annum. And at that time, that was about 7-8% of the market. That market has grown and continues to grow, and being somebody of scale is very important to the end user. So instead of doing a study alongside, we're embedding in our definitive feasibility study coming out at 50,000 tonnes per annum. This will make us the third largest lithium brine project behind our colleagues at Calchari and in the Atacama, but this is a major project. And the reason it's gone that way is that debt is available from the export credit agencies and the demand is clearly there. As a matter of fact, it's improving our potential offtake discussions. On the next slide, we show what the plant would look like. And as we go through an expansion project, what we aim to do is build another plant alongside this. That's yet to be finalized over the next few weeks, but that's probably what we'll do, and provides greater flexibility in the process. And on our next slide, it's one that you've seen before, where we talk about how direct lithium extraction with Lilac delivers this. Instead of building 20, 30, 40 square kilometers of evaporation ponds, we replace it with simply pumping the brine out, running it through these modules of lilac, and then re-injecting it back where it came from. On the financials on the next slide and the slide after, we show what this delivers at a PFS scale at 25,000 tonnes per annum, 260 million EBITDA annually on a pricing of 15,500 tonnes per annum lithium. At current spot pricing, that number is closer to $1 billion, and with the doubled plant, closer to 2 billion annually. That's twice our current market value for 1 year's production, and that's EBITDA. So these are serious projects now on these current prices. Even if you decided to only take half of spot, that's at least $1 billion a year. On the next slide, we show the debt support. As I've mentioned to you before, thankfully, the government of the UK through UK Export Finance and the government of Canada through their EDC are prepared to fund 70% of our current project, and they are prepared to do that as part of our expansion case as well. When we get closer to the end of the DFS, we'll come up with the numbers behind that, but that was one of the key reasons for going forward. On the next slide, we show our timeline. That is relatively unchanged. We'll be updating this if there is any changes, but basically getting the DFS done and the ESIA by mid-year triggers that financing through financial close and then into construction. We have the cash together with options coming in to fund the equity on the 25,000 tonnes per annum production, and in talking to off-takers, we'll probably go pretty close to having what we need for the expanded case as well. So don't be concerned that there's some massive capital raise coming down the pipe. Now, on our next two slides, we talk about why we would go to 50,000 tonnes per annum. This market that we've been seeing for some time on the macro side, with the growth of electric vehicles, the growth of the mega factories to build the batteries to go into those electric vehicles, continues at a fast clip. So in November, December, we were looking at 255 battery mega factories planned for 2030, of which 151 were operating at the end of last calendar year. Now, to deliver into that, we need at least 10 times growth from lithium production, and this is going to be a real headache for the EV makers. Benchmark came out in November on the back of the COP26 conference. I was in London at the same time. To deliver into the forecast they're looking for, we need more than 3,000% growth in their sector. So there's certainly room for some new producers. On our next slide, we again show another metric, but if you haven't been following the pricing is up significantly in the last 15 months. We've gone from a range of around $9,500, $10,000 to $13,500 a tonne 15 months ago, now to $43,000 to $52,000 a tonne. Now, a number of people say, oh yes, that's just spot, that's not in contracts. Contracts are changing. Offtake contracts are less and less having long-term fixed pricing. As a matter of fact, if you're looking at lithium stocks, look very carefully if the offtake is unallocated. We're fortunate here in Lake that hasn't been allocated yet, but it will be over the next 6 months. And given that demand is running at 3 times new supply, please look at the new developers of scale in this lithium space. So to that end, on our next slide, we talk about our next projects. So our Kachi project, which is in the orange circle, is just down the road from Hombre Muerto, Livent. They're listed on the New York Stock Exchange. They produce about 16,500 tonnes per annum of lithium product, and they have a market value of about $5 billion US. We're going to be producing 50,000 tonnes of consistent high quality product, so it doesn't take long to think about what sort of numbers there are as we move through the uplisting process on the main board in the US sometime mid-year. But we have other projects in our portfolio, Cauchari, Olaroz, Paso. We announced that we're going to be drilling those, kicking that off in the next few days. We announced that in December, and there'll be an update to show that. On the next 2 slides, I'll just give an idea of what that looks like. Our Cauchari project is alongside the second largest lithium brine producer, which is coming on stream this calendar year. And our Olaroz project is alongside Orocobre, now called Allchem, their project, and we have another one called Paso. So our aim is to drill these this calendar year, bring at least one of them through the PFS study, and then we can show this isn't a one-trick pony. It's a multi-asset producer, and maybe we can actually move our production target from 50,000 tonnes per annum to a more aspirational 100,000 tonnes per annum. The equity markets are open for this sort of thing. The debt capital markets, most importantly, are open. I want to remind you, we're not funding this all with equity. This isn't a hard rock project in WA. We're leveraging debt, which is 11-year debt at less than 3%. So don't worry about interest rate rises either. This is how we can get these next projects up and running. Next slide, please. Corporately, this was released for our AGM on Tuesday. That was a 10-day VWAP at 98 cents. It's currently trading in the mid-80s. Cash of about 70 million on the books, market value of about 1.2 billion. And if I just go to the next slide. And so in summary, high purity lithium, unallocated supply is valuable. Don't miss this opportunity. Even in shaky markets, the lithium sector is going to go well. So please look at all of them in your portfolio, or might be. What we do different is deliver major ESG benefits and aim to be or continue to be an independent producer. Back to you, Tim.
Thanks, Steve. Bang on time. There's kind of a consistent theme here with some of these questions. Namely, can you provide a further update on the scheduled pilot plant and expectations for potential offtake samples?
So we'll be updating the market as soon as I can provide a more definitive timeline on the demonstration plant on site. We've been running a pilot plant in California now for more than 1.5 years. We aim to have that demonstration plant on site as soon as possible. There have been transport and COVID issues that have slowed that up a little, but we'll be updating the market as soon as we can. Suffice to say, we've got 4 containers that are ready to go. It's about just getting them onto site. We're also constructing, so we'll be updating in the coming weeks a very much closer timeline. Be that as it may, the demonstration plant runs on an entirely different timeline to everything else. The pilot plant we've been running in California feeds the information into the definitive feasibility study, so it will continue on pretty much the same time track. The other question apart from the demo plant was, sorry?
Just offtake.
And so with offtake, I can share with you that when we announced a few days ago that we have formally moved to 50,000 tonnes per annum production, even though that had been flagged for some time, it has definitely improved the urgency of some of the discussions and a sense of fear of missing out. I had flagged that we anticipate announcing one of these agreements probably before the DFS and one soon after. The discussions are getting more meaningful now, and who knows, there may even be some money coming along with those.
And Steve, a couple of questions on will any battery testing results be shared from Novonix soon?
The battery testing results are very similar to what we released to the market more than a year ago. So they meet basic battery testing qualifications. The key thing is that the product that we produce out of a demonstration plant gets into the hands of the offtake partners, the shortlist we're talking to, and they get into that process of actually qualifying it. We'll continue to do testing with Novonix, and we'll have more to talk about that in the future. But really, for now going forward, because of the names we're talking to, they're just quite keen to work out the basic commercial terms they're looking for, which is that we've got a market priced pricing for our offtake on a quarterly basis, where we look at benchmark pricing for the last quarter and use that for the next quarter, and that it's of a significant size, and that we work together. We're not trying to be just another raw materials provider, but actively part of that supply chain.
And Steve, you kind of copped a bit of criticism this week from a fund manager from Paragon Funds Management. They only manage 60 million. He questioned the kind of the technology and your JV partner in particular. Would you care to respond?
Certainly. Naturally, if you're an investor and you've historically been in the resources sector, you're going to be not necessarily favorably predisposed towards new technology. But we've already seen that with the old technology, not only are you producing a poor quality product, but you're leaving half of the asset behind. If we're looking at the sort of things with evaporation ponds now, 45, 55% recovery versus 85 to 90, and at $40,000 a ton, you're losing hundreds of millions of dollars of stock in the ground all the time. So that's the first thing I would say. The second thing is, I understand not supporting new technologies. That's why few people supported Tesla until they had a market value that was larger than Ford, GM, and Toyota combined. So we're more than happy to demonstrate all of these things, and for those who are naysayers to then come into the stock later on when we're listed on the US, when we're part of the ASX 200, and maybe a $5 billion market value company. I also understand that here in Australia, it's easier to support digging a hole in the ground, and there's absolutely nothing wrong with that. Lithium is going well. We need all of these lithium products. What we're saying is the market, the electric vehicle maker and the battery maker are looking for consistent, high quality products. That's what you can do with this technology. We've demonstrated that in a pilot plant, and we're just going to show it at the demonstration plant on site. What you do in 1 or 2 modules, you do in 10, 20, 40 of them. All we're doing is processing water. There's very little scale up risk. The bank debt is behind this, and I must say the offtake is behind it. So it's going to be a heck of an exciting year. And for those of you who follow, the great thing is when we've got naysayers, that continues to create a market and provide opportunities.
Right, Steve, we'll leave it there. Have a nice weekend, and good luck 2020.
Thanks so much for all of you beaming in.
Thanks, mate. Next up, we have Telix Pharmaceutical, market cap of $2 billion, 1-year return of up 63%. We have Dr. Christian Behrenbruch, who is the CEO and Managing Director with us. Telix is a late-stage radiopharmaceutical company developing diagnostic and therapeutic assets using molecular-targeted radiation. That is a mouthful for me. Christian, thanks for your time. You've just undertaken a big capital raise, and we know you're busy. Over to you.
Thanks, Tim. Yes, we completed a capital raise last week, and which has now gone into settlement. We raised a placement of $175 million from sophisticated institutional investors, and we have a share purchase plan out that was in fact launched. That will be launched on Monday for our existing retail shareholder base as well. So just a summary about the company. So we are actually a commercial stage company. We received approval for our first product, which is a product for an imaging product for managing prostate cancer. It was approved by the TGA and the FDA last year, and we're in the final stages of getting approval for that in Europe and Canada, and also pursuing its approval in other countries as well. So really an exciting time for the business as we progress towards becoming an earnings-based company. It's a rather rare event in life sciences companies. As you mentioned, capital raise, notwithstanding the sort of challenging market conditions, we did a very credible job of raising capital in a difficult environment and with very good support from domestic and overseas fund managers. And what this does is it enables the company to really take its opportunities to the next level in terms of we have 2 more products to put into a regulatory approval process this year, 1 for renal cancer, 1 for brain cancer. We have a global phase 3 trial that's just starting now in prostate cancer. That's a therapeutics program. And we do have some aspirations over the next 12 months to also expand our pipeline a little bit. So as the first products go to approval and go to market, we want to then start to backfill that pipeline as well. So that 5 years down the track, when our current pipeline is commercialized, that we've got the innovation momentum to continue to create value for shareholders. Moving on to the next slide, Jake. So this is a sort of high-level snapshot of the business. Notwithstanding that we are newly in product approval territory, we have been operating at a commercial scale. We delivered over 12,000 doses of clinical trial doses and prostate cancer imaging product last year. We have a ton of clinical activity, which I'll show you in a second. We're clinically active, in many countries around the globe, about 30 countries around the globe. And what we've built over the last few years, we became a publicly traded company on the ASX in November of 17. And what we've done is we've built a global supply chain and logistics platform that really enables us to get these products all over the planet. And that's a really interesting challenge because radiopharmaceuticals, don't have to know too much about radioactivity, except that we all know that it decays over time. Some of these products have an astonishingly short shelf life, and so we have to just-in-time manufacture them. So that means that in addition to doing drug development, very sophisticated drug development, we also have to manage a manufacturing and supply chain that is really unique for this class of products. Moving on to the next slide. So in terms of what MTR is, and Tim, your comment about being a mouthful is a perfectly reasonable one, but what we do is we develop targeted radiation. And essentially what that is we develop molecules or drugs that bind or hit a particular signature on a cancer cell that's unique to that type of cancer. And we attach to it, we tether to that molecule a radioactive payload. So these are systemic injections. That's an IV injection into your arm. And then these molecules whiz around your body, and wherever they encounter a cancer cell, they deposit their radioactive payload. Sometimes we attach a small amount of radiation and we get imaging. So we put a patient into a thing called a PET scanner. This is a very commonly available medical device. It exists in all cancer hospitals, at least in most of the major markets. And what that'll do is give you an image from your toes to your nose, everywhere where that target is expressed. And it's incredibly useful for oncologists to stage and manage patients, and particularly for some of the diseases that Telix targets. And then what we do is we change the dose to a therapeutic dose. We increase that level of radioactivity, and then we treat patients. We essentially treat that scan. So this is the ultimate example of a personalized or precision medicine strategy, in the sense that we, as we call it here, we see the disease and then we treat it in a very personalized way. Next slide, please. So at a macro level, what our vision is as a company is today, or historically, radiation has been an incredibly important part of cancer care. I don't think there's anybody that isn't touched by cancer. And if you've ever had a loved one or yourself that's had cancer, you'll know that radiation therapy is a very important pillar of cancer care, alongside surgical and pharmaceutical interventions. And what our vision is as a company is that 10 years from now, any cancer application where you are developing, any cancer application where you would traditionally use radiation, instead of sitting in the basement of a hospital in a big machine called a linear accelerator, which sort of shoots a high energy X-rays at your body, and it irradiates the tumor externally with a fair bit of collateral damage caused in the process. We go from a box, that very expensive capital equipment, workflow, complicated workflow, big hospital real estate type of environment. We get rid of all of that and replace it with a shot, an injection that does exactly the same thing, actually arguably with greater efficacy, because instead of just shooting radiation at things that we can detect, this has the ability to deliver even microscopic disease radiation dose as well. So it's a very effective way of delivering radioactivity to cancer patients. Next slide, please. So this is our pipeline. I'm not going to go through it in a ton of detail, except to note that we have mostly a very late stage program. Our imaging agents tend to precede our therapeutic programs because the clinical trials are more straightforward and faster. As I mentioned in my opening comments, we have one product approved already in some countries, including the US as a major market. And this year we expect to make 2 more product filings as well. This will generate a multi-product revenue stream for the company as we sort of transition to this earnings-based funding model. And then we have a number of therapy programs that are coming in behind, notably in prostate cancer, in renal cancer, and an aggressive type of cancer called glioblastoma, which is a brain cancer. And we published some of our preliminary results last year, very encouraging clinical data, albeit early stage and still more clinical development needed, but very encouraging preliminary data. We also, we built Telix through M&A and licensing. So We are always looking for opportunities to expand our dominance. You know, Telix is one of the largest and best established companies in this field globally. So we acquired a Swiss-German company named TheraPharm last year with an interesting product in bone marrow conditioning. This is basically before you have a bone marrow transplant. This is a way of essentially removing your bone marrow so that you can accommodate a donor transplant. And we think that this will lead to a safer way of doing that. At the moment, the chemotherapy approaches that are used are quite toxic and have a high morbidity and mortality rate, and are not suitable, for example, for pediatric patients or for patients that are more elderly. So we see the opportunity to really open up that space to a wider variety of clinical applications. Moving on to the next slide, you know, what you'll see here is, and so whilst the previous slide sort of showed the major disease indications that we are working on, prostate, renal, and glioblastoma, what this slide also shows you strategically where Telix is going. We, although those first indications are really important and they've been very carefully chosen, many of our products have opportunities in other indications as well. So we are demonstrating this concept of targeted radiation in breast cancer. We're looking at bladder cancer. We see all kinds of follow-on applications for the technology. And so this is, if you like, this is your laminated roadmap above your desk of all of the clinical activity that we're undertaking around the globe. And you know, I think it's fair to say there are not that many companies that are really comprehensively demonstrating what this technology is going to be able to do for oncology care. So it's a really exciting summary of what our prospects are and the disease areas that we're going to be able to influence in the future. Next slide, please. So in terms of 2022 and beyond, this capital raise was clearly a major inflection point for the company. You know, it was clearly understood by the market that we needed to raise capital in order to make this transition to an earnings-based company, because we need a strong balance sheet to kick off these very large global clinical trials. So the ProstACT phase 3 trial, which is now starting in Australia and will extend globally, is a sort of a $60 million, $70 million investment over the next few years. And so, and also to be able to be effective in developing partnerships for our assets, we absolutely need to be able to have a strong balance sheet. So that was critically important. We're focused right now on the Illuccix rollout in the United States in particular. You know, probably 85% of our revenue over the next 12 months will come from the US. So super critical. Commercializing our diagnostics program, advancing, as I showed you on the pipeline slide, our core therapy programs, and then expanding our pipeline. So really, you know, very clear focus for 2022 in terms of that commercial transition. Next slide, please. Launch of Illuccix in the US is in good shape. We're just finalizing our inventory following the FDA approval just before Christmas. And in the first half of this year, that will be complete. And then in Q2, you'll really see the launch rollout on a larger scale way. We've got our reimbursement in play. Reimbursement is vital for commercial launch in the US. So that's our next big challenge after FDA approval. We've built out an excellent network of centers that have our product readily available. And so a really strong launch expected for this product, and very high and unmet need for this product in prostate cancer staging and prostate cancer management. Next slide, please. Renal cancer program. This will be our second approval from the company's internal efforts. We're finishing a global phase 3 trial right now called the Zircon study. It's 90% recruitment. So that's a big commercial milestone coming up that we're really excited to bring to the market. That will finish recruitment probably late next month or maybe in March. And then a couple of months later, we'll have a top line readout. So around a mid-year readout for that clinical trial. Game changer in managing kidney cancer, and really excited to present the results of that study. Next slide, please. I mean, then just in terms of the sort of the third focus area, it's really our prostate cancer therapy program. It consists of 3 clinical trials to explore different utility of this product, but the primary one is the global phase 3 trial. And as I said, that's kicking off in Australia now and progressing to the rest of the world over the next 6 months. Last slide, and then I'll wrap it up for questions. So we accomplished a great deal in the last quarter with our first product approval in the US. with commencement of recruitment for our prostate cancer therapy programs. It's really a major milestone to be able to deliver that therapeutic into patients. We finalized our distribution network for European product launch for Illuccix, hopefully later this year. And we also got our FDA approval to start our 2 clinical trials in renal cancer in the United States. So really major milestones. And then, you know, as I've said, really a commercial focus over the next quarter, a lot of clinical and commercial inflection points that are going to be a real interest to market and to partners. And we look forward to keeping you informed of our progress. So I'll pause there, and Tim, over to you.
Thanks, Christian, and congratulations on that capital raise. It's probably going to prove to be very well timed. Can you talk about the sort of institutional support you've got on that capital raise? You know, traditionally biotechs see, you know, international health care funds come on board. There is talk that you will be included in the ASX 200. So what sort of institutional support did you see?
Yeah, very broad. I mean, a mixture of specialist and generalist investors. You know, we've heard the speculation about making it in the 200. Clearly, that opens up the interest level to, you know, deeper pocketed generalist investors and super funds. So we had good support from that sector as well going into our capital raise. You know, it's very personally, you know, it was very painful to watch a capital raise of this size, you know, executing it in these kind of market conditions. You know, wasn't the most fun I've ever had in my entire life. But I think it's a real testament to the quality of our shareholder base and the conviction that the company is really doing something important. You know, it's not a hypothetical company. We're developing important medicines that we are delivering to patients around the globe every day. And so we believe very, very strongly in what the company is doing. And we think that the investor base that got behind us in the capital raise does too. And once the markets straighten themselves out, our very near-term commercial and clinical inflection points are going to be very exciting to shareholders. And
can you give us a bit more color on distribution? How do you distribute your medicines, for want of a better word? Are you looking to use partners, or is there, do you have the ability now through this capital raise to kind of grow your own sales force?
So it's a mixture, and it depends on the territory. In the US, we do have a hybrid model where we have a sales force, but we also work with a key distribution partner, actually a couple of key distribution partners in the US. And so we leverage that as well. You know, clearly it's a tall ask for a small company to build sales forces. I mean, you know, I think investors understandably get skittish when companies talk about building sales forces. So we have a very specialist sales force that then leverages big distribution partners that have a lot of commercial firepower. In Europe, we rely entirely on a distribution network. We have a very small, you know, like can count on one hand, number of sales staff that are there essentially to support a distribution model. In Asia Pac, we're a hybrid. We sometimes, and for example, in China, we have a dedicated partner in China where they take full responsibility. In ANZ, you know, it doesn't take much effort to cover Australia and New Zealand, so we do it ourselves. So it just depends a little bit on the territory. But in Europe, although we use distributors, we are a vertically integrated manufacturing company. So we actually produce the final drug product in Europe, whereas in the US, we use contract manufacturers for doing that. So it really does depend on the market. Each market has its own nuances, and we adapt accordingly.
Great, Christian. Thanks for your time. Really interesting. Love to get you back on. There's a few more questions here that you could type live if you have the time. So have a nice weekend. We'll see you again.
Thanks, Tim. Much appreciated.
Thank you. Next up, we have, welcome back, European Metals, ASX code EMH, market cap around 242 million, 1 year return of up 25%. We have with us the executive Chairman, Keith Coughlan. The company is a mineral exploration and development company with the aim to create a sustainable European lithium supply chain with a low carbon footprint. Keith, thanks for your time. Over to you.
Thanks very much, Tim, and thank you to all attending. Good to be here again. So as Tim mentioned, European Metals is developing the Cinovits lithium project in the Czech Republic. It's the largest hard rock lithium resource in Europe. Thank you to Steve, the first presenter, for setting the scene, I think, for lithium and the supply-demand equation. I think what's evident is this metal is in deficit. It's likely to be in deficit for some years to come. And nowhere in the world is that more evident than in Europe, where we operate. Europe, one of the largest consumers of lithium in the world, with no production of lithium whatsoever in Europe at all. So that's the basis for our offering. As you see from this first slide, we will be developing a fully integrated lithium project, that is the mine and the processing plant. So our end product is not a concentrate, not like your spodumene concentrate producers here in Western Australia, but our end product will be battery-grade lithium hydroxide and or battery-grade lithium carbonate sold directly into the battery industry. I mentioned it's the largest hard rock lithium resource in Europe. That's important for a number of reasons. Long-term security of supply, for example, and that's becoming more and more important. The access to local supply chains is becoming economically and politically important, and COVID focused the world's attention on that in a large way. The project has very compelling economics. We updated our most recent preliminary feasibility study last week. You can see the numbers there on the screen, nearly $2 billion after tax NPV in US dollars, and an after tax IRR of 36%. So very, very compelling. We'll be producing just under 30,000 tonnes per annum of battery-grade lithium hydroxide and or the carbonate equivalent. We have 3 very important and large partners working with us in the project that are listed there for you. And very importantly, the project has very, very strong ESG credentials that I'll touch on in a moment. The project is funded to final investment decision expected later this year. We can move on to the next slide, please. I mentioned the EU, and this is very important for us. The European Union has committed fully to a battery industry. They have committed fully to an electric vehicle future. And it's starting to realize now that they need to develop the critical raw materials to go into those batteries to feed those electric vehicles. So this has become very important for us, and the support we're receiving from the EU in developing the project is significant. Next slide, please. And these are some of the reasons why the EU is so committed to this. This is how many EVs are being sold in key European markets currently. So just in last month, you can see the numbers there. So we're in some markets upwards of 50% of all the vehicles sold on a monthly basis are some form of electric vehicle. So you can see that this groundswell is well and truly taking hold in Europe. It makes sense. It's a densely populated region. So rolling out infrastructure for charging EVs, etc., is comparatively cheap. This is one of the reasons why the EU is so committed to this thematic. As you'll see from the next slide, Norway, for example, 90% market share of electric vehicles now in Norway. Yes, it's a much smaller market, but this is an indication of where those bigger European markets are going. And on the next slide, these are the forecasts for the growth in electric vehicles in Europe out to an enormous 39 million vehicles by 2030. So the lithium for these vehicles doesn't exist, for the batteries to go into these vehicles, and it needs to be developed. A lot of lithium projects need to come on stream in a very short period of time. Next, please. And further, the supply-demand equation for lithium is evident there for you. And that's why we've seen such a significant kick up in the lithium price over the last, well, really the last year, but very notably over the last couple of months. And next, please. So I mentioned that Synovitz is a very large lithium resource. In fact, it accounts for over 65% of all of the hard rock lithium resources in Europe. So this is important because it focuses the attention of the governments of the EU on assisting us in developing the Synovitz project. The location on the next slide. So this is becoming a very, very busy slide. These are all the battery factories being built or in advanced planning in the region. And you can see that there are many, many battery factories being built to feed all of those 39 million electric vehicles that are going to be driving around on European roads in only 8 years' time. So if you added together all the capacity of these battery plants now, it's more than 25% greater than the total amount of lithium consumed in the world back in 2020. So that gives you some idea of the increase in demand that we're seeing. Next slide, please. I'm moving through these slides quite quickly. obviously we're time constrained, but the full deck is available on our website. Please go and have a look, and you'll get much more information there. I mentioned that the project has a very positive ESG profile. This is clearly becoming more and more important for all mining projects globally, but particularly for something like battery metals. Some of the keys here: Synovix is a historic underground tin mine. So our impact on the environment, our impact on the community is very minimal. You know, we're not breaking new ground. We're not trying to dig an open pit. Existing underground mine that we will simply be re-entering goes a long way to improving our ESG credentials, particularly with regards to social and environmental factors. We will be feeding the plant with solar power. Our project level partner is the Czech national electricity provider. So they've committed to providing green energy to the project, and that's most likely solar power. They already have more than enough capacity of solar power in the region to easily account for what we'll draw at Synovix. Other factors: the process we use is a single low temperature roast, much less energy consumptive than traditional spodumene roasts. This saves money, but it also saves greenhouse gas emissions, which leads to our greenhouse emissions being potentially as low as any hard rock lithium resource in the world. And I'll show you a slide on that shortly. We'll also be recycling a significant number of our key reagents. We are in an area that is being transformed from an old coal mining area into green energy. That's also very important as coal mines are being shut down right across Eastern Europe. Next slide, please. And here's the decarbonisation case. We released this information to the market a couple of months ago. You can see from the second bar chart there that Synovix does have the potential to be one of the lowest, if not the lowest, CO2 emitter of all hard rock lithium projects globally. This is just on the CO2 emissions, on the global warming potential. We also score very well on water consumption, which is obviously an issue for brine producers. And we also score very well on acidification. And as acid is used in a lot of other process routes for producing lithium, notably from spodumene. Next slide, please. I mentioned our strategic partnerships. They're very important to us. Czech, the national power utility in the Czech Republic, very large company, about a 14 billion, 15 billion euro market capitalization. They own the grid. They own all of the electric vehicle charging stations throughout the Czech Republic, and they've been moving away from coal mining and towards green energy for some years now. So very important for us to have Czech involved. The European Institute of Innovation and Technology is a European Union official body. They are the chief facilitators of the European Battery Alliance. They're involved heavily with us in terms of introducing us to potential financing for the project. European banks, central banks, as well as commercial banks. They're also involved in assisting us navigate the European Union grant scheme, and there are significant funds available for projects like us under the various European Union grant schemes. And thirdly, the SMS Group is a very large German private company who are conducting our definitive feasibility studies. Very important to have SMS involved because they too are very well connected with European banks, particularly the German banks. And on to the next one, please. I mentioned the PFS update that we put out just last week, producing nearly 30,000 tonnes of battery-grade lithium hydroxide. That becomes a globally significant producer at 30,000 tonnes. There is potential for us to take that higher. That 30,000 tonnes per annum, it utilises less than 10% of the overall resource over 25 years. So we will look at increasing that production, but 30,000 tonnes in itself is significant. We can do that for an all-in net cost per tonne of lithium hydroxide of about $5,500 US dollars, and that versus a current lithium hydroxide price of north of 50,000 tonnes per annum gives you some idea of the potential upside in this project. The 50,000 tonnes is perhaps $50,000 is perhaps an outlier. You know, in the PFS that we released last week, we used 17,000 as a long-term lithium price. but I feel that price is probably quite conservative. As I said, the NPV of this project in US dollars after tax is nearly 2 billion. Our share of that is about half, or about 1.3 billion Australian dollars, versus our market cap of 250 or 260 million Australian dollars, gives some indication of the potential upside in the value of our securities. We do have a disconnect right now with a decrease in the price of most lithium equities against obviously very strong increases in the price for the underlying metal, for lithium. And I think when we see these markets settle down, you're likely to see a gap up in prices of many high quality lithium stocks. Next page, please. We're putting together a world-class team to develop this project. This is the European Metals side of that team. Obviously, as I mentioned, we have our in-country partner CHES, who employ some 32,000 people. So clearly they have some significant human resources as well. And we'll be building out that team over the rest of this year as we move towards final investment decision. And the next slide, please. That's the website's there. We are listed, as you can see from this slide, ASX, also in London, also in NASDAQ. We have a NASDAQ American Depository Share, and we're also listed on the Frankfurt Exchange. Our website is at the bottom of the page there. Please visit and have a look at the full presentation and a lot more information that's there. Thank you all very much for your time.
Thanks, Keith. A question here, you hold the largest hard rock deposit in Europe, where the lithium is kind of found in clays rather than silicates, as they are in Australia. As there's no lithium currently produced from this rock type, can you talk to the methods used to extract the lithium?
Well, Tim, it's actually a common misperception that there is no lithium produced from this rock type. Zimbaldite, which is our host rock, it's a type of lepidolite. Yes, it varies. It differs from some lepidolites in it's got a much higher iron content, which is actually an advantage to us that I'll touch on in a moment. But lithium is produced from other lepidolites. Notably in China, there's at least 4 producers of lithium carbonate in China. They're private companies, which is why they're not well known and why this misconception exists. But it is being done. With Zimbaldite, as I mentioned, the high iron content assists us because it enables us to use wet magnetic separation in the first stage of our process. That's a very simple process. And through the use of that wet magnetic separation, we extract all of the tin and tungsten credits. I mentioned earlier that Cinevex is a historic tin mine. It's still one of the largest undeveloped tin resources in the world. There's about 270,000 tonnes of contained tin in our JORC resource. And the price of tin, as the price of lithium has, the price of tin has increased dramatically over 2021. We modelled $26,000 a tonne in that PFS update last week for tin. It's actually trading at more like $40,000 to $42,000 a tonne at the moment. So the tin credits are very important to us, and being able to extract them easily is a distinct advantage.
And your JV partner, which is the Czech National Power Company, what are the most significant benefits they bring to the project? Well,
they've been operating in the Czech Republic since it became a country, since the wall came down in 1989. The CHES has been developing the country's power resources and coal mining. So they have experience in mining, obviously, albeit coal, and they're moving away from that, as I stressed. But they have 30 years of history of operating in the country, 30 plus years, which means they know how to permit mining, how to permit processing plants and easements and all these sorts of things. And that's very, very important to us. CHES is also owned 70% by the Czech government. It is a publicly listed company, but 70% owned by the Czech government. And they have announced a joint venture between CHES and the Czech government to build a battery factory about 50 kilometres from our project. So clearly there would be a very good chance that CHES and the Czech government would become an off-taker, a customer of Cinevex, and ultimately buy some of our carbonate or hydroxide.
And of course, the other piece of the picture there in Czechoslovakia is you've got Skoda, which is obviously a subsidiary of VW and one of the biggest, or plans to be one of the biggest EV producers in Europe by the end of the decade. Can you talk to how all these pieces could potentially come together for European metals?
Well, you're right. Skoda is owned now by VW, but I can assure you in the Czech Republic, it's still very much considered to be the Czech car, and they're very patriotic, the Czechs. VW has announced significant EV plans, as I'm sure you're aware, and this also includes their commitment to build 6 battery factories of their own throughout Europe. So we are in the mix, or the Czech Republic is in the mix to be the first of those, or the next announced of those VW battery factories. And they are talking about building 40 gigawatt hour battery factories, which would consume about 30 to 33,000 tonnes per annum of battery grade lithium hydroxide, or about what our project will produce in phase 1. So it is possible, and it has been explored in Czech media. It is possible that VW Skoda could become a partner in the battery factory that I mentioned earlier that's currently been announced between CEZ and the Czech government. When they announced that battery factory, they did state that there would be a third partner in it, and that partner would likely be an auto/battery maker. So it is possible that VW Skoda could become a partner in that project, which, you know, by extension would mean that it would be likely that they would become an off-taker to the Synovex project as well.
Great, Keith. That's all we have time for. There's quite a few questions there. If you've got time to answer them live, that'd be great. If not, I'll shoot them to you over the weekend. Thanks again for your time.
Sure, no problem. Thanks very much, Tim. Thanks to the team for putting this together.
Thank you. Next up, we have Artisan Limited, ASX code ADV, market cap of $30 million, 1 year return of down 39%. The company engages in the exploration of mineral properties such as gold and lithium, magic word, in Australia and Canada. We have with us Rob Langley, who's both the Managing Director and CEO. Rob, over to you. Thank you.
Yeah, thanks, Tim. Great opportunity to tell listeners about Artisan's Pickle Lake Gold Project and how we're also managing our lithium assets, which are part of our portfolio as well. The other, Steve and Keith, have done a really good job on explaining the lithium environment and EV batteries, so I won't linger too much on that other than what benefit that's going to bring to Artisan and shareholders. First slide I've got up there is just to help explain exactly where we are. Not a lot of ASX people have eyes on Canada at the moment, but I can tell you that this area of northwest Ontario, where you see Artisan's Pickle Lake Gold Project up there in the Uchi geological belt, is a hot area at the moment. There's a land grab going on, which has been spurred largely by a new discovery just to our west at Great Bear Resources Dixie project. Kinross, who I'll mention several times in this presentation, just recently made a $1.8 billion acquisition bid for Great Bear Resources, and they don't even yet have a JORC resource published. So that gives you some sort of feel for what's happening in the Uchi of northwest Ontario and why Artisan are in such a good position there. We have built up over the last few years a significant and compelling gold land package, which is now 900 square kilometres. It's a continuous package with JORC resources, exploration targets, and a number of walk-up targets. That somewhat differentiates us from others. We've got a number of different options to go and explore on. We're alongside brownfields gold mines in Pickle Lake, and we've got the drill rig turning. So our rig started yesterday. So we're underway again drilling at Pickle Lake. In this area, you've got most of the major gold producers and some big Australian names in there as well. Barrick, Newmont, Evolution obviously bought the Red Lake operations recently. Orteco alongside us at Pickle Lake, drilling out the Pickle Crow resource. And of course, I keep referring to this Great Bear Kinross deal, which is so important in this area. So this slide is really, I could almost do this slide and take questions, because it summarises most of that, the value that we have in Artisan at the moment. We've just recently bolstered our board with the introduction of a new chairman and an NED, which I'll introduce. And we're making permitting and arrangements with all our First Nation communities around us over there. And on the bottom there, I've got, what are we doing with our lithium assets? Well, we've currently got a 49% free carry joint venture interest with a new ASX-listed company called Green Technology Metals, who are listed in November and currently have a market cap of about $150 million. So they're doing really well. They're funding all the drilling and all the expenses. and we still have a 49% holding in those 3 projects there. Those shares which we were given as part of that deal are currently worth over $7 million. So as capital may become more and more difficult to access, we have a nest egg brewing here in lithium in terms of our equity in the lithium stake and future production opportunities as the GT1 team drive those projects forward. Next slide, please, Jake. On the left there, you can see Bruce McFadzean, who I really welcomed into the board late last year. Bruce is a mining engineer, so we've got some technical expertise to overlook both our gold progress as well as understand the lithium space, and really well connected. And on the other end of the board team there, Michelle Roth recently joined us full-time as an NED, who's based out of New York, an investor relations expert, and really knows the North American market. So she gives us real-time feedback and context through Canada and the US, and also Europe, with investors that are looking at what Artidan are doing in this space. On the far right there, we have both Angelo and Harrison live in Thunder Bay, and we have an extended team that are based there. So we have people on the ground that are carrying out the drilling and all the negotiations at the same time. Next slide, please. That's a quick snapshot of our performance. We're getting a reasonable uplift in our share price of late. Again, down in the bottom there, we've just put out our quarterly this morning, so we're just under 3 million in cash. But what's important to factor into that is that we do hold 9 million GT1 shares, which at the volume weighted average price is worth about $7.5 million to us at the moment. GT1 can also increase their joint venture holding from 51% to 80% by paying us an additional $3.5 million in either scrip or share, or a combination of the two. So again, really giving ourselves options going forward in terms of funding all the activities that we have planned at Pickle Lake. Next slide, please. So that basically summarises our Pickle Lake Gold project, what we're doing there in the Uchi Belt, and on the bottom, our free carried interest in lithium, and shows you all the activity going on up in that northwest area of Ontario, which is, as I keep saying, a really hot spot at the moment. There's a number of gold mines already in production, and there's some new ones coming on stream at the moment. I've been through most of that, so we can jump to the next slide, Jake. Geologically, we're in that Uchi sub-province, which runs sort of east-west all the way across Ontario. Red Lake has produced about 30 million ounces historically, and Evolution are the main producer in Red Lake. Halfway between us and Red Lake, Springpole is a new gold mine that First Mining Gold will be opening up soon. And at Pickle Lake itself, which produced 3 million ounces, there's also a new mine north of us called Musselwhite, which is happily producing about 300,000 ounces a year. In the same region of Ontario, you've got Rainy River, a new gold Inc. Operation down near the US border, and operations over the border in Manitoba in the same Uchi sub-province. So this is really a rich, well-endowed gold Archean system that we know quite well, and we're exploring in there for the next big deposit. Next slide. There's a colourful picture there of the Pickle Lake Gold Project. Green are Greenfields projects, orange are our Brownfields projects alongside existing gold mines in Pickle Lake, and purple or magenta are really our hot targets that we're going after that either have JORC resources or historical resources that we're going to convert. You can see to the south of us, talking about a land grab, Evolution recently moved into Pickle Lake, and you can see their large land holding that they picked up along the southern area of Pickle Lake. In the northeast of the Pickle Lake region, Orteco are doing an earn-in with First Mining Gold, and there are other juniors in this space as well. So we really have over 20 known prospects and deposits in this area that we're systematically picking off. At the moment, we're drilling at the Esca prospect, which is an orange prospect you can see on what we call the Western Hub, alongside Barrick's Golden Patricia gold mine. Next slide. This is a similar picture of Pickle Lake, and again shows that Evolution ground to the south of us in red. All of the orange ground is Artidan's, and we built a significant package there, which is all interconnected. On the right-hand side there, we're just listing the other activity in this area, just to put the spotlight a bit on what's going on in the area. Red Lake is dominated by Evolution. In Pickle Crow area, you have Orteco. Well, I think they've got 5 rigs working at the moment at Pickle Crow, both on an existing underground mine and the step outs around that, similar to what they've done at Bellevue, some of the management team there. But they're quite limited into that area. So I guess what sets Artidan apart is we have the width of this orange blob, as you can call it, our exploration ground, is about 110 k's east to west and 30 to 40 k's north to south. So we have a number of opportunities there to either go and find the next big deposit or to string together a number of resources along the way. It's a massive project that is really deserving all of our attention. There's another TSX listed company called Metals Creek, which will work in the Donna Lake mine in Pickle Crow. And as I keep mentioning, Great Bear Resources, with a market cap of $1.8 billion, have done an exceedingly good job making these new discoveries in areas which were previously underexplored and attracting a corporate like Kinross to come and buy them out. Next slide. This is where we're drilling at the moment. I'll jump through some of these slides. It's on our website now and it's loading on the ASX. Where we're currently drilling is at Esker. That's the black label in the middle there. We're basically going to be drilling either side of the Barrett gold mine, which is called Golden Patricia. That produced about 600,000 ounces at an amazing grade of 15 grams per tonne. So we're chasing that same structure along strike. There's about 50 kilometres of strike along this western hub that we're going to be exploring over the next year or two, really going after the next Dixie or the next Golden Patricia in this region. Very little exploration in here, but a lot of high-grade intersections. You can see there at Dorothy, there's an intersection there of 472 grams per tonne from 184 metres down, and none of that has ever been followed up. Next slide. That gives you a comparison. In the bottom left there is the Great Bear Dixie resource, and that's almost to scale. So they've really got a deposit stretched over about 3 or 4 k's to the west of us, and we've got 50 kilometres to emulate their success. Next slide. There's a detail slide there of the drilling that we're going to be doing at Esker. I can go into that more detail and take questions later on, but the drilling is underway and we're hoping to add rigs to that as we move forward. Next slide. And then after Esker is well underway, we're going to move the other side of the Golden Patricia mine and start drilling at the Dorothy Dobie, which is where we had that 400 gram hits. And there's a historical estimate there of nearly 100,000 ounces at 5.8 grams per tonne that we're going to systematically explore, convert that to JORC and find out where the next big Dixie is in our region. Next slide. As others have touched on, ESG is a really important part of our business. Working with First Nations has been really critical over the last 18 months or so with COVID. We've got permitting on 4 of our projects now, and we're working our way through. We've got a really good relationship with First Nation, which is so important to getting a sustainable exploration program going in this area. And having people that live and breathe the air there and understand local issues has been really important to us. Next slide. That's our news flow coming up this month and moving into next quarter. We'll be producing results out of Esker, getting permitting at Dorothy Dobie, and following the news flow from Green Technology Metals activity in the lithium space. They recently reported, I think, 40 metres at 1.5% lithium. So they're really doing all the hard lifting for us in lithium, and their share prices are appreciating because of that. I think that's about it. Next slide, I think it just closes out. So I'll throw it back to you, Tim, because I'm cognizant you're probably a bit short on time.
Oh, sorry. You're the lucky last, Rob, so we've got some time here. Okay. I was just looking at you mentioned a JV, a 49% JV in green technology. They've got like a market cap of 150 million. How does that convert into $3.5 million worth? Can you just give us a bit more colour on that?
Yeah, so we did basically a shareholder vote last September, and we looked for partners to work our lithium projects while we concentrated on gold. And there's some tranches of payments in that. We received a $4 million payment in shares and scrip when they listed for them to instantly acquire 51% of the 3 lithium projects. Now, they have until 1 year after listing, which will be November 10th of this year, to decide whether or not they want to increase their joint venture holding from 51% to 80%. And in order to do that, they pass over $3.5 million of either scrip or cash at their election.
Right, okay, gotcha. Now, a question here. So how does your land package and the number of targets kind of compare to some of your neighbours? What can you read into that? I know you touched on it briefly.
Yeah, I think that's important to emphasise, is that we're not just limited to a postage stamp or 1 or 2 prospects. We've got a lot of historical noise with TSXV juniors, which has been out in different parts of Pickle Lake doing sort of ad hoc exploration and finding some good noise, which is how Great Bear started. They started to put together an old Newmont package where people have walked away from it thinking there's nothing there, and look at where they are now. So we've joined all that together, and we've got at least 20 known prospects that have historical high-grade intersections. It's a case of working our way through both in terms of a permitting point of view and also from a priority, what's going to give us the best bang for buck. So the Western Hub has really come into focus as we've started to realise the geology there is very, very similar to what Dixie is over at Great Bear Resources project. Others that are drilling out old gold mines is a different sort of investment strategy. We hope that they're successful, because I think if someone like Orteco or someone gets going mining there, it changes the opportunities there to satellite feed smaller deposits. But Arden is absolutely focused on finding tier 1 deposits, and we think we've got the right geophysical structures and the right approach to do them.
I mean, given your neighbours, they're going to be watching you pretty closely, aren't they?
Well, I don't think if any company has a BD department worth their salt, they're watching all of the activity out here. The land grab has both been gold and lithium. The Root Lake project, which is now under the management of GT1, has a 4-gram gold hit on it, as well as a spodumene historical estimate. So Barracks and these sort of guys have been doing deals with junior parties over there. It's not necessarily our strategy to look for corporate to come in. We want to get to a level where we're hard to ignore, but we're well aware that our eyes on this region and on Arden as well.
And what's the timeline look like for development?
Well, our focus at the moment is absolutely on just exploration on the Western Hub for the next year or two. We've got 10,000 metres in front of us at Dorothy Dobie and Esker. The lithium side of things, I'll point people towards Green Technology Metals. Luke Cox, John Young and Cam Henry are doing a fantastic job there, both in terms of resource, but also in terms of looking at industrial sites. Canada is becoming very open, and that whole North American space is catching up with you. Keith talked about how fast Europe has moved ahead. Well, North America is swinging over as well. So I think the development side of the lithium is going to be really, really exciting. And by keeping that 20% minimum, even if GT1 do increase to 80% of the joint venture, we still own 20% of the whole project and 20% of potential future revenue streams. So that gives us some insurance, and again, that nest egg of moving into the future in terms of access to capital.
And given how active it is out there, and given COVID and supply chains disruptions, are you seeing any impact in terms of getting resourcing?
Well, I think last year was probably more difficult. Canada's opening up now, and while it's important to everyone, and we have to take precautions, testing, and stay out of First Nation communities, they're moving on with business. I'm stuck here in Perth, and I think Keith can testify. We're kind of getting a bit sick of it, but I won't open up that conversation. Certainly, labs and staffing levels and logistics are tough, and access to people to work. But we've got a drill rig working, double shifting, so we'll focus on what we can control and keep our staff. I'll be heading up there shortly, as will Hayden. Travel safe and look after the people in our community.
And for your shareholders and potential investors over the next, say, 6 months or so, what should they be looking for from you guys?
Well, I think both results in terms of what we're drilling at both Esker and Dorothy Dobie, around an old Barrick gold mine, as well as news flow from the lithium side of things. Lithium is obviously absolutely in the focus at the moment, and we have a lot of faith and trust in the likes of Cam Henry, who's building plants all over the world at the moment and knows the industry inside out, as to what their plans are going forward as they build that resource up at Seymour, do some drilling at Root, and really develop the whole lithium story. That will add a lot of benefit and news flow to Arden, which was our intention. So we can absolutely focus on results and activity in the Red Lake, Pickle Lake region of the Uchi Belt in northwest Ontario. All these projects are in the same region. The lithium projects are right in amongst the same area of northwest Ontario. So we're working with the management over there in Thunder Bay as well. So it's a lot of synergies between the two companies in terms of operations.
Great, Rob. That's all we have time for. Nice to see you again. Have a nice weekend, and we'll hear from you later in the year.
Thanks. Appreciate it.
Thanks, everyone. Enjoy your weekend. Stay safe, and we'll see you next week.